Hi everyone, this is how to do journal entries with this little chart that I made. Okay, so the first thing I always do is write down this chart whenever I'm doing journal entries. So it's assets minus liabilities minus common shares minus revenue plus expenses plus dividends. And once we have all that, we know that assets here are positive, expenses are positive, and dividends are positive, so they act like this orange box. Okay? Then we have liabilities, common shares, and revenue. They're negative. So if negative, they act like this. Okay? So when I'm doing a transaction, I first like to start off by figuring out what is important in it. So it says we purchased an estimated 3 months of supplies on account from Aero Supply Limited. Well, we know that supplies is an account. And then we know that on account means it wasn't in cash, which means it was in accounts payable. Okay? So, supplies is an asset. Okay? An asset is positive, so if positive, we go to this box. So if our supplies are increasing, if we're getting more supplies, we debit supplies in our journal entry. And if we're like losing supplies or selling supplies and it's going down, we would credit supplies. Okay, let's go through that with a liability. So on account, which means accounts payable, is a liability. It's negative, so we go here. Liabilities are negative. If our liability is increasing, so if we're becoming more in debt, more liable, we would credit accounts payable or a liability. If we're becoming less liable, if we're like paying back our accounts payable, we would debit. So if it's going down, we debit accounts payable. So here's the longer version. Figuring out what's important. Highlight the accounts. You know supplies and accounts payable are important. It's the first step. The second step is identifying what they are. So supplies is an asset and accounts payable is a liability. Then are the accounts increasing, going up more, or decreasing, going down less? So supplies is an asset, we're going up, we're getting more supplies. And accounts payable is a liability. It's going up because we're becoming more liable. Okay? So, using that chart, asset, or supplies is an asset, it acts positive, so it goes here. It's increasing, we debit. Liabilities, accounts payable is a liability. It's negative, it's going up, we credit it. So